9.2, accounting for merchandise purchases. We have three objectives here. You need to be able to describe accounting procedures used in ordering merchandise. You need to be able to discuss the purpose of a special journal, and you need to be able to journalize purchases of merchandise on account using a purchases journal. So inventory is a list of assets, usually containing the value of individual items. Merchandise inventory then is going to be the goods a business has on hand for sale to their customers. Perpetual inventory is an inventory that is determined by keeping a continuous record of increases, decreases, and the balance on hand of each item of merchandise. So perpetual inventory is usually going to be some type of computer program that's going to keep track of that. So when they say increases, that's going to be any time that we buy more merchandise. Decreases is going to be any time that we sell that merchandise, and then it will keep track of our balance of that merchandise. Periodic inventory is merchandise inventory evaluated at the end of a fiscal period. Physical inventory is when a periodic inventory is conducted by counting, weighing, or measuring items of merchandise on hand. So if any of you have jobs where you work at a merchandising business, you maybe have had to take part in a physical inventory before. And physical inventory is when you actually go out and you count your merchandise. Now, depending on what type of merchandise you sell, it might be counting, it might be weighing, or it might be measuring. So if we sell something by the weight of it, then we would just weigh instead of count. The same thing with measuring. If we sell something by measurements, then we're going to be looking at the measuring of that. Oops. Cost of merchandise is the amount a business pays for goods it purchases to sell. A requisition is a form requesting the purchase of merchandise, and a purchase order is a form requesting that a vendor sell merchandise to a business. So if I were to work at a t-shirt shop, I'm going to go back here. The amount that I pay to buy those t-shirts that I'm going to actually be selling is going to be my cost of merchandise. When I decide that I want to buy a bunch of t-shirts to sell, I probably am going to need to request the purchase of that unless I have the ability to make that decision. So when I'm requesting that, that would be called a requisition. And then I would also have a purchase order, and that purchase order would actually go to the vendor that I'm buying those t-shirts from. Here's an example of a purchase order. So up here we can see our company, where you can see who we're purchasing from. They give us a PO number. A lot of times you'll hear purchase orders just called POs. We have the date for that PO, and then we have who they're supposed to ship that order to. And so here we're asking for 200 of these lamps and 150 of these lamps. They give the unit price for each, the total price for each, and then the total of everything together. So this is almost like an order form that we give to our vendor. Now we're going to get into special journals. A journal that's used to record only one kind of transaction is called a special journal. What we've been using before is down here, this one here, we've just been using our general journal. But now we're going to use actually 5 different types of journals. Okay, so we have a purchases journal, which is used for any purchases of merchandise that we purchase on account. We have a cash payments journal. Anytime that we pay cash for something, it would go into our cash payments journal. We have a sales journal. That's going to be used for any sales of merchandise that we sell on account. And then we have a cash receipts journal. Anytime we receive cash, that would go into our cash receipts journal. So what we do now, it's going to be a little bit harder, because now when we have a transaction, we have to first pick what journal does that transaction go into out of these 5. First, we're going to look at these 4. If it doesn't fit into any of these 4 special journals, then we simply put it into our general journal. Purchase on account is a transaction in which the items are purchased, but we pay for them later. So those are going to go into our purchases journal. It is a special journal that's used to record only purchases of merchandise on account. A journal amount column headed with an account title is called a special amount column. Now, we've seen the special amount columns before when we are dealing with our general journal, if you want to call what we were looking at before. It had a cash, debit, and credit column. It also had a sales credit column. That would be a special amount column. And those special amount columns are just there so we don't have to continue to write an account over and over and over. So here's what our purchases journal looks like. This is very simple. We still have the name of our journal and we have our page. We still have our date column. Oops, sorry. Here, notice though, it says account credited. So any account that we list here, we are crediting that account. Now we have a purchase number. This kind of helps us because anytime that we have a source document that is that purchase number, that is going to tell us it's going to go into our purchases journal. We have our post reference column like we're used to, but notice here we only have one column for our debit and credit. And if we look how it's labeled as purchases debit, accounts payable credit. So any number that goes here is going to be debited to purchases, and then it's going to be credited to accounts payable. So we've simplified it into one column. We only need to write that number once. A purchase invoice is an invoice that is used as a source document for recording a purchase on account transaction. Terms of a sale is an agreement between that buyer and seller about the payment for merchandise. And then the due date is the date at which an invoice must be paid. So here we see a purchase invoice. We see that it's from that Win Lighting. Remember, we had filled out that PO to Win Lighting, almost like that order form. And so now they're giving us the purchase invoice. And they're saying, okay, here's what we're giving you. These 200 lamps, these 150 lamps, the unit price, the total amount. They're also giving us some more information as to when the items were shipped, when they will be delivered or were delivered. And then they give us these terms, N30. And then they give us our payment due as to when that payment is actually due. So here they're saying the first thing that we should do is we should record our initials of the employee that's going to process that invoice. They should record the date that they received that invoice. And then they also should make sure that the purchase invoice number is on there. Okay, then we're going to place a check mark next to each of the amounts in the total column to show that those items have been received and the amounts have been checked and are correct. So once these things are delivered, we want to actually make sure, okay, yeah, we got 200 of these lamps and their math is correct. It is $610. Yes, we got 150 of these lamps. Their math is correct. It was $472. We do want to check these things off. Now, if we don't check them off for a month, it's going to be kind of difficult to go back to the company and say, hey, you shipped us the wrong information or the wrong items. And then we always want to make sure that we're reviewing the vendor's terms and the due date. So the terms and the due date as to when we need to pay that. So our transaction, November 6th, it says that we purchased merchandise on account from Win Lighting, $1,082.50. Purchase invoice number 525. Now, we are buying something on account, or I shouldn't just say buying something. Key word in here is buying merchandise. We are purchasing merchandise on account. So that tells us we're going to go into our purchases journal. We're going to record our date first. Then we're going to put the vendor that we bought from in our account credited column. Then we're going to record our purchase invoice number. Notice we don't have to put that P in front of it. Normally we'd put P525. But because this is already labeled as a purchase number, we do not put the P there. In fact, if you do put the P there, it will mark it as wrong because that's like saying purchase invoice number P $525. Okay. And then we're simply going to put in the amount into our special amount column. This is now saying that we are going to debit purchases. Notice the label here. We're going to debit purchases for $1,082.50, and we're going to credit accounts payable for $1,082.50, specifically when lighting. Number one, what is the difference between a periodic inventory system and a perpetual inventory system? With a periodic inventory system, the value of the inventory is determined by a physical count, and that's usually done at the end of the fiscal period, or it is done, I should say. Sometimes they'll do it more than once throughout the fiscal period. A perpetual inventory system, though, is the value of inventory on hand that's determined by continuous record keeping of increases and decreases, and then the balance at all times. Now, some companies will actually do a combination of both of these. They might be doing a perpetual inventory system, but once a year they do the physical count to make sure that they are right. Number two, when the perpetual inventory system is used, in what account are purchases recorded? And in what account are purchases recorded when the periodic inventory system is used? So in a perpetual inventory system, purchases are going to be recorded in our merchandise inventory account, but in a periodic inventory system, purchases are recorded in the purchases account. And that's what we're going to be working with. Number three, identify the 4 special journals typically used by a business. So the 4 special journals are going to be purchases journal, cash payments journal, sales journal, and cash receipts journal. If they don't fit into any of those 4 journals, then it would go into our general journal. Number 4, how are special amount columns used in a journal? Special amount columns are going to be used for frequently occurring transactions. So those accounts that we use over and over and over, they have created special amount columns for us so that we don't have to continue to write those accounts. Number 5, why are there 2 account titles in the in the amount column of the purchases journal? All transactions for purchasing merchandise on account are going to have a debit to purchases and a credit to accounts payable. So instead of writing that number over and over and writing those account names, they give us one special amount column to write that number in once. Number 6, what is the advantage of having special amount columns in a journal? I feel like we've kind of answered this one already. It eliminates writing general ledger account titles in the account title column over and over. So it saves us time, and that also is going to help reduce any mistakes. Number 7, what information is contained on a purchase invoice? The purchase invoice is going to list vendor name and address, the date, the quantity of the items, a description of the item, a price of each unit item, and then the total amount of the purchase. Now, they might be formatted a little differently, but it should have that information on a purchase invoice. Okay, now go on to 9 to work together.